You've probably felt it already this month, that quiet tension that comes with February, shorter days, bills that don't wait, and that question sitting in the back of your mind. Is anything changing, or am I about to get caught off guard? If you're on Social Security, SSI, SSDI, Medicare, or any kind of fixed income, February can feel especially tight. It's a short month, but the expenses don't shrink with it. And when headlines start floating around about new stimulus checks or major announcements, it's natural to feel confused, or hopeful, or skeptical, or all three at once. So let's slow this down. Let's talk calmly. And let's walk through what this February 19th update actually means for you, without panic, without hype, and without rumors. Because here's the truth. There is movement happening this month. There are announcements being made. But not everything you hear online applies to everyone. And the worst thing you can do is make decisions based on half information. So first, let me say this clearly. Your regular Social Security, SSI, and SSDI benefits are still being paid on schedule. Nothing has been cancelled, nothing has been paused, and no one is quietly taking away benefits in February. That matters, because fear spreads faster than facts. Now let's talk about why February 19th matters at all. February is one of those months where agencies quietly line things up for the rest of the year. The Social Security Administration finalizes internal adjustments, Medicare reconciles deductions, Treasury departments process offsets and refunds, and state agencies coordinate with federal programs. That doesn't always mean new money, but it does mean clarity, and clarity is powerful when you're living on a fixed income. Now, about those stimulus check headlines. Here's where we need to separate fact from assumption. As of mid-February, there is no universal nationwide stimulus check being issued to every Social Security recipient, the way there was during the pandemic years. That part is important. If you hear someone promise everyone gets a new check, that's not accurate. But, and this is the part many people miss, there are targeted payments happening. Some are federal, some are state-based, some are tied to taxes, some are tied to refunds, credits, or retroactive adjustments. And that's why some people are seeing extra money while others are not. Let's talk through the most common situations calmly. First, Social Security and SSDI payment timing in February. February payments follow the normal Wednesday schedule based on your birth date. If your birthday falls between the 1st and 10th, you are paid on the 2nd Wednesday. Between the 11th and 20th, you're paid on the 3rd Wednesday. Between the 21st and 31st, you're paid on the 4th Wednesday. That has not changed. SSI recipients receive their February payment at the end of January because SSI always pays on the first business day of the month. That's normal. It's not early money. It's not a bonus. And it does not mean March will be skipped. That confusion comes up every year. Now, where does February 19 come into play? February 19 has been referenced because several administrative updates and payment batches fall around that date. Some are Treasury issued, some are state level, and some are tied to tax processing. If you filed your taxes early and you receive Social Security or SSDI, you may see a refund or credit deposit around this time, especially if you qualify for refundable credits like the Earned Income Tax Credit or the Child Tax Credit. For seniors who still file taxes, this can feel like a stimulus, even though technically it's a refund. Now, for SSI recipients, tax refunds usually don't apply unless you had earned income. But here's the key reassurance. Tax refunds do not count as income for SSI in the month received, and they are excluded as a resource for 12 months. That means a refund does not automatically reduce your SSI. That's an example of clarity beating fear. Now let's talk about Medicare, because this is where expectations often collide with reality. January and February are when Medicare Part B premiums are fully reflected in Social Security checks. For most people, that premium is deducted automatically. So if you saw your January or February check and thought, why does this feel lower than I expected? It's often because the Medicare deduction is now settled. The COLA increase raised benefits, but Medicare premiums rose too. This creates what's called an expectation gap. On paper, your benefit increased. In real life, your net deposit might feel smaller. That doesn't mean something went wrong. It means two systems adjusted at the same time. Now, about those new stimulus checks people keep talking about. Some states are issuing one-time relief payments. Others are issuing energy credits, property tax rebates, or inflation relief checks. These are not Social Security payments. They are state-administered programs. Eligibility depends on where you live, your income, and whether you filed taxes or applied. So if your neighbour got a payment and you didn't, it doesn't mean you were skipped. It means the programs were different. Now let's talk about who benefits from February updates. People who filed taxes early and qualify for refundable credits. People receiving retroactive disability approvals. People in states offering targeted relief. People whose overpayments were corrected or adjusted. Who does not benefit? People who are already receiving standard benefits without changes. People who don't qualify for credits or state programs. People who have not filed required paperwork. And that's not a judgment. It's just how the systems are structured. Here's a simple example. Imagine your Social Security benefit increased by $60 due to COLA, but your Medicare premium increased by $20. Your net gain is $40. Now imagine you also received a $300 state energy rebate in February. That month feels good, but March goes back to normal. That's why it's important not to budget permanent expenses around temporary money. Now let's talk about reassurance, because this matters. There is no freeze on Social Security. There is no secret delay planned. There is no sudden rule change taking effect on February 19th that cuts benefits. If there were, the SSA would be required to notify recipients formally. What is happening is administrative cleanup, seasonal adjustments, and targeted relief, the kind of behind-the-scenes work that doesn't make flashy headlines. So what should you watch for? Check your deposit dates, not rumours. Read official letters from SSA or Medicare, not screenshots. If you receive extra money, verify the source before spending it. And if something looks off, wait a day or two before panicking. Processing delays do happen. If you're unsure whether a payment counts as income, ask before reporting it. Mistakes happen most often when people assume. Now, let's take a breath together. February is not a month of losses. It's a month of alignment. Your benefits are still arriving. Your coverage is still active. Your eligibility hasn't suddenly disappeared. And while not everyone will see extra money, no one is being quietly cut off. That matters. So here's the calm takeaway. February 19 is not a deadline you should fear. It's a checkpoint, a moment where systems reconcile and information becomes clearer. If money arrives, understand why. If it doesn't, that doesn't mean something bad is coming. And if you're ever unsure, stay informed from reliable sources, not loud ones. You've earned stability. You deserve clarity. And you deserve information that doesn't scare you just to get clicks. If this helped you feel a little more grounded, you're not alone. Let me know in the comments what questions you still have. And if you want steady updates like this, you know where the subscribe button is. No pressure. Your benefits are still moving, your support systems are still in place, and you're not navigating this alone. Take care of yourself, and we'll stay on top of this together.